Welcome to your next edition of Highlights, our investing and trading strategies, brought to you as a bonus from time to time for members of our candlecharts.com family. And we'll first start with a candle misuse alert. There's a lot of very bad information out there about candlesticks, and our main goal here at candlecharts.com is to make sure you get the most useful and correct information. And one of these misuses is, I see this time and time again, that because the real bodies are the thick part of the candlestick line, many people forget about the shadows. And remember, what the shadows can do is give you a sense of the emphasis of the supply-demand situation. If we're just looking at the real body, we're really kind of clapping with one hand. As the Japanese say, it takes the clap of two hands to make a sound. So let's look at the importance of shadows for your trading and investing. So here we have some long lower shadows. And by the way, this is an intraday chart. As you know, candlestick charts can be used intraday, daily, weekly for investing, or even monthly in any market, and are especially great for timing your option trades. This happens to be an intraday chart. And although there are no specific candlestick, well, actually, here's a hammer. This is actually a almost a strict criteria hammer. For those of you who have our candle scanning software, you know that we have the ability to not only scan for regular hammers, but strict criteria hammers, which are more powerful hammers. Essentially, it's a hammer with a white wheel body where the close is right at or near the top of the session. But anyway, even without this hammer, look what happened every time this market got near 176. The market sold off, rallied, although it closes a black or red wheel body depending on your charting package. The long lower shadows show that once the market got down here, the bulls were able to come in and drag it higher. Same thing here. Same thing over here. Here, of course, we had a bullish engulfing pattern. And then we had a hammer. But even if we didn't have a hammer here, even if there's a bit of an upper shadow, we visually can see that every time the market got around 176 or so, the bulls came in. So that's visually showing you, even without looking at the size of the real bodies, just looking at the shadows, it shows you that the market is rejecting lower levels. And same thing over here. We'll look at this in the second on the left side. But here, we have a series of long upper shadows. This happens to be a shooting star over here. There are some lower shadows, but essentially more these upper shadows here, even though it's a lower shadow. Every time the market got near 1050, 1040 in that area, the market pulled back, pulled back, pulled back. So even if we didn't have a shooting star, say we had a little bit of a lower shadow here, the upper shadows are showing you the market's rejecting higher levels. Now this is interesting. Now here the market is pulling back, but what would keep us from being bearish, although it's making lower lows each day? Right, those long lower shadows are showing us that for whatever reason, whenever the market gets down to near these lows, the bulls are coming in. This is not enough of a downtrend to say that it's a hammer, but that long lower shadow and that long lower shadow here are certainly confirming an area of demand. So these are just some examples of the importance of upper shadows. And by the way, if there's one upper shadow, I don't pay too much attention to it. It should be a few lower or upper shadows. So here we had lower shadow, lower shadow, lower shadow. Okay, over here we had 3 upper shadows. Here we had 2 or 3 lower shadows. But something like this, although it's a resistance area because it's a high, I wouldn't place too much emphasis on a single upper shadow. And due to demand, a lot of you are away during Memorial Day, so what we decide to do is extend the Memorial Day sale. Go to this link over here. Let me just move down the chart a little bit. Go to this link here, and you'll discover how you could save 15% on just about all our training and tools. And on that link, we also have a little Q&A to help us determine which are the best products for your specific needs.